All right, good morning. Thank you for joining our monthly webinar. And this month we're going to talk about investing in offshore real estate using your retirement account. So we'll go ahead and get started. Again, as a reminder, if you have any questions, I'll get to them all at the end. Just go ahead and type them down in the chat box there, and then I will attempt to answer every question after we get done with this. For those who attend this webinar regularly, you're used to reading this. We put this up as a legal obligation just to let you know that Entrust does not provide any investment advice or endorse any particular investment. We are providing educational material on how one can use their retirement accounts to invest in non-traditional assets, to invest in things other than stocks, bonds, mutual funds. We're not necessarily saying that you should or shouldn't, but just that if this is something you want to do, then this is how you would go about doing it. And we always encourage you, before doing any investments, to speak to advisors, accountants, attorneys, that type of thing. So a little bit about Entrust. We've been in business since 1981. We have currently somewhere between 21 and 22,000 individual retirement accounts, and we hold about $3.3 billion in assets. We are one of the oldest companies in the industry, and we focus on education, and this is sort of the proof of it. The majority of us are certified IRA service professionals. We have offices throughout the United States, and we have a national continuing education program. So we offer a 2 CE credit class for realtors, CPAs, CFPs. So if you're interested in something like that, let us know. And we do lots of in-person events and webinars such as this. If you want to have a private webinar for a group, then just let us know, and we'll be happy to arrange that for you. So we're going to talk about, first we're going to go in what exactly is a self-directed IRA for those who might be new to this and aren't familiar with it. What are the benefits? What types of investments are allowed? Which it will be easier to talk about what types of investments are not allowed, which is the next bullet point, investment restrictions. How you can fund your investment, how you can make the purchase. There's various ways you can do this. And then we're going to get into specifically about the offshore real estate due diligence that we recommend that you do, and then explain the disqualified persons and prohibited transaction rules, and then how to get started. And then finally at the end, we'll do a Q&A. So what exactly is a self-directed retirement account? It is a retirement account which you make all your own investment decisions. So Entrust does not advise you or help you decide what you're going to invest in. That's the self-directed part of it. And also, it allows you to hold non-traditional assets, alternative assets inside your retirement account. Most people who have a retirement account have it with a bank or brokerage firm, and those bank or brokerage firms are only willing to hold, they limit you to only investing in the publicly traded stocks, bonds, and mutual funds that they typically sell you. But the IRS doesn't limit you. The IRS says that you can have pretty much any type of asset you want to hold inside a retirement account. You can invest in pretty much anything you want inside a retirement account, but you need to have your account with a custodian who's willing to hold whatever asset you want to invest in. So for those of us in the self-directed industry, we are willing to hold non-traditional assets, a non-traditional asset being anything other than stocks, bonds, mutual funds that that are publicly traded. So real estate, precious metals, private placements, etc., all of those are allowed to be held inside a retirement account, and Entrust will provide all the administrative and custodial services. We will be the administrator and custodian that will hold those assets and process those investments inside your retirement account. Again, we're not saying you should or shouldn't, just that you are allowed. And if you want to do it, if you went to a brokerage firm and said, hey, I want to buy real estate, or I want to invest in an offshore real estate or something like that, the brokerage firm would certainly say we don't do that. They might even say you're not allowed to do that, which would be incorrect. You're most certainly allowed to do it, but you need to have an account with a custodian like Entrust who's willing to hold it. So what are the benefits? Well, you get to make your own investment decisions instead of having a broker who is pushing some funds on you that they're going to make a commission on, and you might not really understand very well. If you understand real estate, if you have a particular company that you want to invest in that's a privately owned company, or if you want to use your IRA to lend money or any of those things and generate interest, you're allowed to do that, and it gives you the ability to make the investment decisions more clearly by giving you the ability to invest in non-traditional assets and diversify. So instead of being limited to just stocks, bonds, mutual funds, you might hold 4 or 5 different mutual funds and think you're diversified, but they're still all primarily invested in the stock market. They might be in different industries or indexed to different things than each other. They might be different, but chances are they're all going to move sort of in the same direction based on how the broader market moves. Whereas if you hold real estate or precious metals or something like that, it's not tied to the stock market and it might go in a different direction. And then you get all the tax benefits. So if you buy real estate in an IRA and you sell real estate in an IRA, you don't have to 1031 exchange it because it's already held inside a tax-sheltered vehicle, which is inside the retirement account. So you get the tax, any revenue generated, any rental income or appreciation that you get in the property, it all goes back in the IRA. So it grows tax-free or tax-deferred depending upon the type of retirement account that you have. So in terms of types of investments allowed, pretty much anything. I'm focused on that bottom bullet point, almost anything. I mean, real estate is very popular. Private placements are very popular. Precious metals are very popular, but we have had people invest in things like a racehorse and cattle and a bowling alley and an airplane, and had somebody invest in a rock band, like financed a rock band hoping to make some money off of it. So pretty much anything you want. It has to be for investment purposes. We'll get a little bit more into the rules around prohibited transactions, but if you can imagine it, you're probably going to be allowed to invest in it as long as it's not involving a disqualified person. And like I said, we'll get into that a little bit later. Here are the only things you're not allowed to invest in inside a retirement account: collectibles, life insurance, and S corporations. S corporations due to how they file their taxes. So you can't buy, so it says any work of art. So you can't buy a work of art, but you could invest in an art gallery, any stamp or coin, any alcoholic beverages. So you can't hold wine inside your retirement account, but you could invest in a winery, right? So one's a business, the other is a collectible. So no collectibles, no life insurance, no S corporations. Other than that, you're pretty much going to be allowed to invest in it. So brings us to our topic of the day: can you buy offshore or foreign real estate within an IRA? There is no prohibition in the IRS rules that says you're not allowed. So if it doesn't say you're not allowed, then you can infer that you are allowed. There are certain countries that you might not be allowed to invest in according to the U.S. Treasury Department. So you'd have to do a little due diligence to make sure that it's not a country where there aren't restrictions for probably Patriot Act reasons that you can't invest. But by and large, you're allowed to buy real estate in other countries. It must be, if you're going to do it inside an IRA, it must be for investment purposes only. It can't be for personal use, right? So if you want to buy a property in another country that you want to go stay in there on vacation every once in a while, if you hold it inside the IRA, the rules state that you and other disqualified persons are not allowed to stay in that property. And we're going to get into that a little bit more detail as we go along. How can you buy offshore real estate inside your IRA? Well, the same as a way that you could buy domestic real estate inside your IRA. You can either do a direct purchase. So you have, $500,000. Let's use a lower dollar amount. You have $200,000 in your retirement account, and there's a property worth $150,000. You buy it with cash. You use the $150,000, take $150,000 from your IRA, instruct us to purchase that property. The property is now held inside your retirement account, and hopefully you're generating a return on your investment. So you take cash and buy it. You can partner your IRA with other investors. So if you want to have some money from your IRA and some money maybe from a spouse's IRA or from your own personal savings or friends or other family members, you can partner those together. Now, this should be partnering with a small p. Partnering is a term that we use in our industry, so it's not a legal partnership. Like an LP, a limited partnership, but it is a term that means that you're combining your IRA with other investors to make an investment. So your IRA can combine with others to buy property or buy an offshore property in this particular instance. Leveraging debt financing. There are financial institutions that will loan money to your retirement account to buy an investment, particularly real estate, because then they can use that real estate as collateral. And then finally, to get checkbook control, if you want to have checkbook control over the funds, you can use a single member LLC as a pass-through entity that allows you to, again, have checkbook control over the funds. And I'll explain all those in more detail here. So first off, the direct purchase using cash. It's the simplest, quickest, and simply you're using cash inside your IRA. So as I said earlier, you have a couple $100,000 in your IRA. The property is worth less than that. You just take the cash and use it to buy your IRA or to buy the property inside your retirement account. So simply, the IRA has cash, buys offshore real estate. Title is held by the retirement account. When you use your IRA to buy a property, and this applies whether it's offshore or domestic, the name of the entity that's going to own that property is not your personal name, it's the name of your IRA. With Entrust, that is the Entrust Group for benefit of your name and account number. So that becomes the entity that goes on title. It goes on all the closing documents, goes on the purchase contract, owned by your IRA, all revenue received by the IRA, all bills paid by the IRA. Funding option 2, you can partner with your IRA. You can partner with another IRA. You can partner with personal money. You can partner with other people's IRAs or funds. So the ownership is established based on the percentage that each of the different investors put into the purchase. So if you're partnering with yourself, for example, and it's $200,000 and you're using $100,000 from your IRA and $100,000 from your savings account, then your IRA would be a 50% owner of the property and you personally would be a 50% owner of the property. And I'm going to anticipate a question that I usually get. If you own 50% of the property, does that mean that you can stay in it 50% of the time? The answer to that is no. If your IRA owns any percentage of that property, you are still a disqualified person and are not going to be able to stay in the property or do work on the property, and we'll get into that in a little bit again. But in terms of partnering, again, you're combining your IRA with other investors, and each investor, and other investors can be other IRAs, it can be individuals, it even can be your own personal self. You can have multiple if you have a traditional and a Roth. You can have those two different accounts, or a traditional and a health savings account. You can use those two different accounts and they become percentage owners, proportional owners based on how much money comes from each account to buy the investment. So in this case, we use an example where you use your own IRA plus your own personal savings. So your IRA is an investor, you yourself are personally an investor, take the money, you buy the offshore real estate. So the IRA is partnering, so the IRA owns 1% and you personally own 1%. Debt financing. There are financial institutions that will lend money to your retirement account to buy real estate. They, by law, have to be a non-recourse loan, which means that the only recourse the lender has in the event of a default is to take the property. They can't go after you personally. They can't go after any other assets in your IRA, right? So it has to be a non-recourse loan. There are a fairly limited number of financial institutions who are willing to do non-recourse loans to IRAs, but they are out there. They do exist. We have a list. So if you want a list of non-recourse loans at the end of this, you'll get my email and you can just reach out to us. Or when you finish and there's a questionnaire thing at the end and you can just ask somebody to send you the non-recourse lenders list and we can send it. But the loan, it's a note secured solely by the property, right? You can't provide any personal guarantees. You can't use any personal collateral. It can only be the property itself that's being used as collateral. So as I said, in case of default, lender can only go after the property, can't go any other assets. Typically, the lender is looking for a higher down payment. They're going to be looking for 35, 40% even down. We have 65 to 70% LTV, which means 30 to 35% down, but I think we even see more like 40%. Credit check, it doesn't necessarily apply, right? Because you're not borrowing the money. Your retirement account is borrowing the money. So why are they going to run a credit check on you when you're not the borrower? Right? So typically that isn't something they're going to look at. They're going to look at the finances of the deal. How much are you putting down? How much cash do you have in your IRA? What's the value of the property? How's it going to generate income? That type of thing. And then UDFI stands for Unrelated Debt Financed Income Tax. Your IRA may be subject to what is called UDFI. You might also hear it as UBIT, your Unrelated Business Income Tax, or UBTI, Unrelated Business Taxable Income. I've seen it put both ways. So if you are using debt financing, be aware that your IRA might have an expense of UDFI that's going to have to pay at the end of the year. So how does that funding for debt financing? You have your IRA with money in it. Your IRA borrows from a financial institution through a non-recourse loan, so now you have more money than just in the IRA, and then you buy offshore real estate. The IRA receives the loan. The IRA pays the loan back, right? The IRA owns the property. The IRA borrows the money. The IRA pays the loan back. We're involved in all those processes. So we have to sign the loan documents on behalf of the IRA. We have to sign the purchase documents for the real estate on behalf of the IRA. We have to pay the loan back from the IRA, and everything is done at your instruction. So you decide who you're going to borrow from, you decide what property you're going to borrow, and you instruct us to process all those transactions, and we do that. And then finally, you can use a single-member LLC. So what this involves is instead of your IRA buying a property directly, your IRA invests in an LLC, and then the LLC becomes the entity that owns the property. So it becomes a pass-through entity. And as we get into, when I get into this a little bit more, you're going to come to realize that when buying offshore real estate, you're going to likely need to set up an entity within that country. So I'm getting ahead of myself a little bit, but it might not be an LLC. That country might require you to set something up specifically in that country, but it's like the equivalent of an LLC. But it becomes a pass-through entity that gives you checkbook control over the money. So instead of IRA holding us as the IRA custodian holding all the funds and processing the transactions, you set up an LLC where you name the IRA as the member, then you instruct us to invest in the LLC. So the IRA, the investment held inside your retirement account is the LLC itself. But you can be the manager of the LLC, which gives you checkbook control. You decide what bank you want to have that LLC hold the money under, and then you as manager, you make investment decisions, you write the checks, you receive the rental income into the LLC. The money has to flow from the LLC back to the IRA before you can take it out as a distribution because the LLC is owned by the IRA, but it does give you checkbook control. Immediate access to funds, you don't have to contact Entrust every time you need a check cut. And then obviously LLC stands for Limited Liability Corporation, so there is some legal limited liability protection that you get through an LLC. Although I've had lawyers say that the IRA gives every bit as much legal liability protection that an LLC does, but that would be a conversation to have with a lawyer. The disadvantages, the LLC typically is going to cost some money to create, as well as you're probably going to have to pay the state some amount of money every year to hold an LLC registered in that state. So there are some costs that you get. Entrust does not set up the LLC. We don't help you set up the LLC. We have names of people we can refer you to that other Entrust clients have used to set up an LLC, but we don't do it specifically. We just administer and custody the retirement account itself. So there can be some costs. You do have to maintain. Any transaction that's done is through the LLC, and since you're the manager of the LLC, it's up to you to keep records of all the outgoing and incoming transactions that are going on through that LLC. And there might be state tax filings that you have to do and talk to a tax advisor. But if it's 100% owned by your IRA, that's owned by a disregarded entity, and so there shouldn't be any. There might be a form that you have to file, but that doesn't mean you have to pay any taxes. Just there's often a form to file. So again, to use this graphically, the IRA has money. It invests in the LLC. The LLC now has the money, and the LLC then buys offshore real estate. And LLC or foreign corporation holds title of property. Again, as you see, or going to see coming up shortly, this is likely a way that you're going to have to do it in most countries that you want to invest in. You're going to have to set up a foreign corporation to do this. So let's get into some of the due diligence as far as using your IRA to invest in offshore real estate. First of all, your IRA is going to have to be with a self-directed custodian. You're almost certainly not going to be able to do this with a traditional bank or brokerage firm. They are not going to be willing to process that transaction. I mean, you can ask, but the likelihood is you're going to need a self-directed custodian like Entrust. Verify that the title can be held in the name of an IRA rather than the name of an entity. So in most countries that you are going to invest in, they are not going to allow an American retirement account, an IRA or a 401k, to hold title on a property in that country. So what you're most likely going to need to have to do is you're going to have to establish some kind of entity in that country. And different countries might have different, it's like it could be a bank trust, it could be like the equivalent of an LLC, or some kind of foreign corporation that you're probably going to need to set up in most countries in order to do that. So if you're looking to invest in a country, you're going to need to find out for yourself if that needs to be done. So if you call up Entrust and say, what do I need to invest in Peru? I don't know that we're going to know the answer. We might not. It depends upon whether anybody else has ever invested in that country. So it's incumbent upon you to do, again, these are self-directed retirement accounts. It's up to you to do that legwork. But note that that's going to be something that you're probably likely going to encounter. You need to make sure you find out who all needs to be involved in terms of, again, buying foreign property buying property in another country is not necessarily going to be the same as the United States. So things like title companies and all that is going to be different in other countries. So you need to make sure that you do your legwork and find out who all is going to need to be involved in that process. Again, Entrust does not do that for you, and we're probably not going to know the answers to that unless we have a lot of experience with the clients investing in that specific country. And I mean, even then it could be hit and miss as far as whether we remember. Know the fees and who's responsible for paying them, right? So when you buy property, sometimes the seller has to pay fees, sometimes the buyer has to pay fees. In this case, your IRA would be the buyer, probably through some LLC or corporation that you have to establish. Know which fees that your retirement account or the corporation is going to have to pay versus what the seller is going to have to pay. And keep good track of that, because when you're buying a property using your retirement account, you can't just simply, if you don't have the money in the retirement account to pay for certain fees, you can't just simply pay them from your savings account. You can't just simply write a check. Anything bought within the IRA has to be paid by the IRA. So you want to make sure that you're aware of whatever fees you're going to incur so that you don't use all the money in your retirement account to buy the property and don't have anything left over to pay the fees. Same with ongoing expenses. They have to be paid from the IRA. So if you're using, the assumption is going to be this is an investment property, which means it's generating income, likely being rented out. Have it planned that as far as what income you're going to generate, what fees you're going to have. If it goes empty for a while and you're not generating income, you're still going to have fees that your retirement account is going to need to be able to cover. So have the ability to, if you don't have the money in your retirement account, at least have the ability to contribute more to that account or to transfer or roll over more money from another existing IRA or 401k that you already have. And then last one, allow time for a lengthy transaction process. It can take a while to invest in a foreign country, so just have some patience and recognize that things can be different in other countries than they are inside the United States. Property manager is probably going to be necessary. It's not a law. It's not required, but you're almost certainly going to need one. So make sure that you do the work and do the effort to find yourself a property manager. We can't promise that the transaction will fund. So once you get into where you're buying the property whether you're needing to do it through some kind of foreign entity or not, we have had instances where, like in a particular country, for whatever reason, they just couldn't make it work. The way the documents needed to be written, the way we need things to be from a compliance standpoint to meet regulatory requirements per the IRS was just not able to sync up, and it just didn't end up funding. It didn't end up going through. So I guess just be prepared that it's oftentimes, I'm not saying it definitely will be, but in foreign countries you just can run into some issues that you don't have in the United States. And just because you want to do something, you want to do it in your IRA, Entrust can't. We're not going to promise you that it'll definitely go through. It depends upon the country that you're dealing with. As I mentioned, I can't emphasize this enough. The IRA not only might not possess actual title to real estate, I'm going to say it probably won't possess title. The IRA will invest in some kind of entity that you're probably going to have to establish in that country. So the IRA will own the entity. That entity will hold title to the actual real estate. Most countries are going to require you to set up some kind of corporation or trust in that country and then have your IRA own that corporation or trust, and then that corporation or trust will then invest in the property itself. And the reason that foreign countries don't have IRAs, not necessarily understand it. So if you all of a sudden find yourself like wanting to buy a condo or a house or something like that in some country, and it shows the buyer is the Entrust Group for FBO for benefit of your name and account number, they're going to be looking at that going, what is that? That's not a person. It's not you, and you're not signing anything. You're sending it off to this company. That's why establishing a local entity and investing in that local entity is probably going to be necessary. And then foreign taxes. right? It's not exactly the same as the United States, so just make sure that you have an understanding. Again, this is due diligence that you're required to do, right? Entrust is not going to do these things for you. It's up to you to do these yourself before you make an investment. In terms of who is disqualified person, so what this means is if you buy a property anywhere, but in this case a foreign country, and you want to stay in the property or you want to do work on the property, then these people are not allowed to, if your IRA is an investor, whether it's through an entity or not, you, your spouse, your parents, your grandparents, so lineal descendants and ancestors, so parents, grandparents, children, grandchildren, and then spouses of children, grandchildren, etc., and then any fiduciary, so if you're a CPA or an attorney or somebody like that, not just IRA fiduciary, just fiduciary, are considered disqualified persons and are not allowed to stay in a property or work on a property, nor is your IRA allowed to buy a property from any of these people or sell a property to any of these people, right? So if you already hold a property in a foreign country and you want to move it into your IRA is not allowed to buy that property because you're a disqualified person. Or if your parents have a property, your IRA can't buy that property. All right? So that's a list of disqualified persons. So prohibited transaction is basically what it says there, any improper use, and this is specifically an Internal Revenue Code. Improper use of an IRA or plan by the plan participant or disqualified person is a prohibited transaction. So what are some examples? Your IRA can't borrow money from or lend money to a disqualified person. It can't sell property to or buy property from a disqualified person. You also are not allowed to use your IRA as collateral for you personally to borrow money. So if you went to a bank and said, I want to borrow $100,000, and look, I have $100,000 in my IRA that I'll put that up as collateral to borrow the money. That's not allowed. The bank's not allowed to do that. They're not allowed to lend you the money using your IRA as collateral. And then lastly, as we just talked about, you can't buy property for personal use using your IRA. If you want to use your IRA, then it has to be for investment purposes only. So it must be an investment. So what we mean by that is that you must have some intention with your IRA investing in an asset that will grow in value for your retirement. So there's no rule that says you have to rent it out, but the expectation is you're buying it for investment purposes. So one of the things that you could do when you're talking about offshore real estate, and to make sure that you meet the qualifications and don't risk a red flag that they're looking at it going, you bought this for personal use, is using some kind of group that places your property in some kind of rental pool, right? Make sure that you observe all the prohibited transaction rules. So what that means is not only can you never stay in the property, you also can't work on the property, you or any other disqualified person. The IRS does require that IRA custodians report a fair market value of the retirement account to the IRS. So we do require all of our account holders to update us with the fair market value of the assets held inside the retirement account. We don't calculate the fair market value. We have hundreds or even thousands of properties held inside retirement accounts, as well as thousands of private placement investments. We have no way of calculating what those fair market values are. So it's incumbent upon our account holders to report that to us, and we have a form for that called a fair market valuation form. We have to report, all IRA custodians have to report a fair market value to the IRS on an annual basis. Now, whether we report the most recent fair market value is largely up to you. If you don't report a fair market value to us, then we're going to report the same fair market value that you held the previous year. But the fact remains is that we are required to report a fair market value. So even if you don't get it back to us with the most recent fair market value, we're still going to report one. Make sure that you're getting, and touched on this earlier, that you have enough cash flow in your retirement account to pay any bills that you're going to incur with the property. It is possible that you can take an asset as a distribution. So if you want to buy a property in a foreign country that you think someday you might move into that country and you want to move into that property, you can take that property. So at the point that you move into that property, it now becomes a distribution to you. So you take ownership, personal ownership of that property. It is also something you can do as a percentage. You can take a gradual percentage ownership of that property over time. So if a property has a value and you decide you want to take $20,000 worth of a $200,000 property, you're now taking 10% ownership of that property and moving it from your IRA to yourself personally. It generates a taxable event, assuming it's not in a Roth IRA, so you're going to get taxed on the $20,000, but you are also you can take ownership of the property, right? So it can be a strategy if you want to eventually retire to another country, like I do, that you can eventually take ownership of that property, or take it all at once when you move into it. So can you distribute the property? The answer to that I just told you is yes. But talk to an accountant about the tax consequences. You can't have any use of it until you have 100% ownership. So again, if you take 10% ownership or 50% ownership, that doesn't mean you can use it 10% or 50% of the time. You can't. If your IRA has any ownership, then you're not allowed, you and other disqualified persons are not allowed to work on the property or stay on the property. You can do partial distributions. You can take a percentage of the property over time. You will need to get an appraisal of the property each time you take a distribution. And then the difference of whether it's taxable versus non-taxable, if it's held inside a traditional 401k or SEP or simple, those are tax deferred that grows, or those are pre-tax contributions that grow tax deferred. So those would be taxable distributions. If you hold it inside a Roth IRA, as long as you've had a Roth for at least 5 years and you're over 59.5, then you can take it as a distribution with no tax consequences associated with it. Okay, so what to do before you invest in offshore real estate, right? Make sure that you prioritize what's most important to you in that country in terms of what you're looking for, budget, cost of living, that type of thing. Be prepared for healthcare issues, right? Make sure the country that you're looking at, that you understand the healthcare, how that's handled, and be prepared for that. Renting it, if it's something you're looking to purchase, you might want to consider renting it first, staying in it first before deciding that you want to purchase it. Make sure that you get good tax advice, that you understand the tax rules in whatever country you're going to invest in. And then obviously, if you're going to retire to another country, you want to calculate how much retirement income you're going to need to be able to live in that country, and then be prepared for that. Be prepared to live on the amount of money that you can afford, that you have inside your retirement account and then Social Security, that type of things. Okay, to open an account with Entrust and process an investment into offshore real estate, step one, open an account, which the easiest way to do that, if you go to our website, theentrustgroup.com, you'll see up at the top, there's I think it's a yellow button that says Open New Account, and you click on that, and it's going to ask you to complete your name, address, Social Security number, date of birth, upload a copy of ID, choose the type of account, pay your new account establishment fee, and boom, your account is open. It'll take you 5 to 10 minutes to do that. Fund your account. You can either make an annual contribution to your retirement account, you can transfer money over from an existing IRA, or you can roll money over from a 401k, 403b, or a pension fund, some other qualified plan. And then step three, you purchase the asset, which involves you instructing us to make the investment inside your retirement account. So you acquire all the documentation, the proper documentation, but it has to be completed in the name of your IRA, which would be the Entrust Group, FBO, your name and account number. And again, if you're looking to buy offshore real estate, the actual investment held inside your IRA is not necessarily going to be the real estate itself. It's going to be the entity that you set up in the country in which you're looking to invest. That's what's going to be held inside your retirement account. And then that entity is then going to invest in the real estate in that country. Okay, 33 minutes that was. So let's see how long the questions take. First question, if the real estate investment generates monthly rent, what happens to those funds? All right, they go back into your retirement account. So the monthly rent is, though the retirement account owns the property, so the rent goes to your retirement account. Now, again, if it's an entity, if you've established an entity in that country, like a trust or let's just use LLC as a general term for entity, right? So if you establish an LLC in that country, it'll probably be called something else, then the rent would go to the LLC. Then the LLC would then transfer the money back to the IRA before you take it out as a distribution. But the rents have to go to the entity that owns the property, which it's retirement account money. If it was directly owned by the retirement account, if you have a country where it can be directly held in the retirement account, then the rents go to us to deposit in the retirement account. Then he followed up, do they simply go into the account or then available to purchase other investments? And the answer to that is yes. And second, can you pay for repairs, et cetera, for the property from the IRA account? Not only can you, you must. Right? The IRA owns the property, which means the IRA must pay the expenses. If you've partnered your IRA with other investors, like yourself or somebody else's IRA, then your IRA is responsible for paying its percentage share of the expenses, and the other investors are responsible for paying their percentage share of the expenses. So if you have maintenance, if you do a new roof and it costs $10,000 and your IRA owns 50% of that property, then your IRA is responsible for $5,000 worth of that $10,000, and the other investors have to pay the rest. Right? If your IRA owns 100%, your IRA must pay 100% of the expenses. Next question, if I'm a partner with my IRA and own an apartment complex, can I stay in it and pay the rent to my IRA? The answer to that is absolutely not. That is a prohibited transaction. Next question, can I buy a timeshare in Mexico? I don't see why not. But note that you can't stay in it, right? If your IRA owns a timeshare, that is you have to decide what timeshare you're going to use and then rent it. Like somebody else is going to have to stay in there and pay for it. Now, whether you want to charge them rent, I guess, you don't necessarily have to charge them rent. There's no law that says that you have to do that. But again, you or any other disqualified person can't stay in any of the timeshares. Right? It has to be something that you just simply own in your IRA for investment purposes only. Next question, can a property owned in whole or in part by the IRA be occupied by the investor once they reach age 62? I'm not sure where the age 62 comes in. A property owned in whole or in part by an IRA can be occupied by the investor anytime the investor wants. But what that means is at the time that it becomes occupied, it now becomes distributed to you. Right? So when you move into the property, you take it as a distribution. So, and actually what you should do is you should take it as a distribution and then move into the property. So you can do that at any age, but prior to 59.5, assuming you have a traditional IRA, a pre-tax, you're going to have a 10% penalty. Actually, or a Roth as well. Prior to 59.5, you have a 10% penalty. After 59.5, there's no penalty, but you are going to get taxed, assuming it's a pre-tax account. If it's a Roth account after 59.5, then there's no tax consequences, assuming you've also had a Roth for at least 5 years. Are there some countries that Entrust has dealt with before that would be a place to invest? We've definitely had investors who have invested in other countries. We've been in business for 37 years. We've had people who have invested in offshore real estate. So the answer to that is yes, there are some countries that Entrust has dealt with before. If you're asking me to name them, I don't know off the top of my head. I know Mexico has been one. I personally had a client who invested in Peru. I think Dominican Republic. I think Dominican Republic is one country. Philippines. People have invested in the Philippines. I know off the top of my head. I think we've had a lot of countries that people have invested in. Next question. Siblings are not disqualified, right? And that is correct. Siblings are not disqualified. So one can buy a property from one sister, for example. Is that a correct assumption? Yes, that is a correct assumption. A sibling is not disqualified. So your IRA can buy from or sell to a sibling. How do we handle a situation where an investment is funded between me individually and my IRA and investment needs additional capital? If whatever additional capital is needed, your IRA has to contribute its percentage and you personally have to contribute your percentage. So if you need to add $10,000 and you own 50%, you can contribute $5,000. You have to contribute $5,000. Now, depending upon how much you need to raise, bear in mind your IRA, if you need to add additional money to your IRA in order to make the additional money come from the IRA, it can't exceed what your annual contribution limits to an IRA are, right? But again, to answer your question, in a situation where an investment is funded between you individually and your IRA, an investment needs additional capital, whatever dollar amount of additional capital is needed, whatever percentage you own, you have to contribute that exact percentage So again, if you own 50%, you need $10,000. You have to contribute $5,000. Your IRA has to contribute $5,000. If it's 60-40, you have to contribute $6,000, and the IRA contributes $4,000, et cetera, et cetera. Also, is a son-in-law a disqualified person? Yes, the son-in-law is a disqualified person. Next question, what if I wanted to buy land in a foreign country, Mexico, that is not going to generate income for a while? The land I'm looking at is an undeveloped area and I can't build on it until years from now. I mean, that's fine. If you're buying a long-term hold, right, you're buying land that you think at some point somebody's going to want to develop on later on, and so you think it's going to be worth a lot of money at a future date, you're certainly welcome to do that. You're allowed to do that. Just note that if you are going to have any ongoing expenses for that land, like if there is property taxes or anything like that, and I don't know how Mexico works from that standpoint, but if there is additional expenses that you're going to incur to hold that land, your IRA has to pay for that. So you need to, if you're not generating any income from your investment, then you're going to need to have the ability to add more money, or at least have enough money in the retirement account to cover any ongoing expenses, or have the ability to contribute more money to the retirement account to cover ongoing expenses. Okay, next question. Can you do this with either kind of IRA, Roth or the regular, and it's traditional is what the other type of IRA is? And yes, you can do that in any type of retirement account you want. You can also do it in a health savings account and a Coverdell educational savings account because Entrust has those accounts. So you can do it in a traditional Roth, SEP, simple. We have an individual 401k, we have an HSA, and we have an ESA. All of those can be self-directed into whatever investment you want to make, including foreign land. Any specific information you can provide on Canadian property investments through an IRA LLC would be appreciated. I'm sorry, I don't have any specific information. You're going to have to do your own due diligence. Do we need to create a local LLC entity in Canada as title holder over the property? Again, I don't know. What are local tax consequences? Again, it's up to you. It's self-directed IRA. You have to do that. You have to do your own due diligence. So I'm sorry, I don't know the answers about Canada. I imagine it shouldn't be that difficult to find out. Talk to a realtor up there, or just Google is your friend. If I sell a property where I own a percentage individually, and my IRA owns a percentage, do I get taxed on my prorated distribution? My IRA percentage does not get taxed. That is exactly correct. Your distribution, any gain that you get as a person, you have to report on your income tax. Any percentage income or any dividend or any revenue that's generated that's owned by your IRA goes directly back to the IRA, so it's held inside a tax-sheltered vehicle. So there's nothing to report. There's no taxes to need to pay. But yes, you personally are going to. I say that without knowing the full consequences of what your earned income is or anything like that. So the answer could be no to that. It depends upon your personal situation. If you don't have any other earned income and you don't get to don't reach the point where you're going to generate any tax, then the answer to that might be no. But you're certainly going to have to report it on your taxes. Next question, at the age of 71.5, are you forced to take a distribution from the foreign property? How is it calculated? So it's 70.5. So it's the year in which you reach 70.5. You are subject to you're required to retake minimum distribution. So are you forced to take distribution from the foreign property? No, not necessarily. You are subject to required minimum distribution, which means all of your retirement accounts are going to be added together, and then you're going to come up with there's going to be a total required minimum distribution. So if you have an account with Entrust and you have an account with Fidelity, and those two accounts in total are going to come up, you're going to have an RMD that's calculated based on the fair market value of your Entrust account. You're going to have a requirement of distribution based on the fair market value of your Fidelity account. Then those dollar amounts can be added together, and you can take all of that from one account or the other. So you don't have to take a percentage from the Entrust and a percentage from Fidelity. You can take the full amount from Fidelity. Now, if you are 100% invested in a foreign property and that's all you have a retirement account with Entrust and you have all your money is tied up in that foreign property and you're subject to RMD, are you forced to take a distribution from that property? The answer to that is yes. You are fully invested inside a foreign property. You're subject to RMD. You have to take a distribution. You can sell a portion of the property and take it as cash, or you can take a percentage of the property as a distribution in order to meet your RMD, but you will have to take a distribution. As far as how is it calculated, I mean, it's based on actuarial tables, right? So it's the total amount of all your retirement accounts, fair market value, and then at whatever age you're at, there's a percentage of the total of all your retirement accounts, and that's going to come up with the amount. Again, but you can take that from, you don't have to take it from each account. You can take it all from one account. It doesn't have to be the Entrust account. Next question. I know you're simply stating the legal aspects, but who and how will check if you're staying at the property that your IRA owns? So what we do is every property that gets held, we put a camera above your door, and we watch you. We watch it 24 hours to make sure you don't stay there. I don't know who would know, right? I mean, we're not watching for it. I mean, I think if you want to ask, you want to give me some scenarios on how you could get caught. Let's say you own a property inside your IRA in a foreign country, and you go and you stay there for a month, and you come back and you're back in the United States, and all of a sudden the IRS is auditing you, and they're looking at your records, and it shows that you traveled to Costa Rica for a month, yet you don't have any expenses for staying there. You don't have any hotel or Airbnb expenses. They would probably infer that you stayed at a property owned by your IRA, would ding you, tell you you committed prohibited transactions, and disqualify your IRA. Maybe you have a neighbor down there who doesn't like you and finds you're staying there, and they know that you own it by your IRA, and they tell on you. I mean, I don't know. Like we're not watching over you. I mean, I'm telling you what the laws are. It's up to you to abide by the laws. Do you provide a list of offshore properties? No, we don't sell any investments. We only provide all the administrative and custodial services for the retirement account, but these are self-directed IRAs. All of our clients have to locate and do their own due diligence on whatever they want to invest in. So in short, the answer to that is, do we provide a list of offshore properties? No. I realize, excuse me, I got to get a drink of water. Okay. I realize that as the investor, we are responsible for this due diligence, but it seems that in general we could be taxed twice on the gain. First, in the foreign country, I would anticipate tax on annual net rental profit and tax again on the capital gain when sold. Okay, I'm going to stop there. There is no capital gain on sold. It's held inside the retirement account. Any revenue goes directly back to the retirement account. So capital gains is simply not applicable in this instance. You either grew your retirement account or you didn't. All the money goes back in the retirement account. But the only taxable event is when you take a distribution from your retirement account, and then you're taxed on whatever distribution you take, again, assuming it's not a Roth. But there is no capital gains tax. In terms of tax in the foreign country, sure, it's possible. That's part of the due diligence you're going to need to do in terms of what's going to be the tax consequences of holding the property. So just to continue with your question, this of course reduces the net gain of the investment. But then when the distribution is finally taken, we have IRS tax. If this were a U.S. real estate investment, the rental and cap gain tax is avoided, correct? So cap gain tax is avoided either way, right, just to clarify that again. And rental tax, I mean, the only issue is, are you going to have to pay tax in the foreign country on the rental income that's generated? And the answer to that is, I don't know. I mean, that's the due diligence that you're going to have to find out on the country. I guess it's certainly possible, but that's probably part of like establishing whatever entity. Like I would think that the bank trust or the foreign corporation, whatever you establish, I mean, if it's passive income, maybe there isn't a local tax that you have to pay. I don't know. But I mean, Terry, I get your point. But note that the only difference between buying real estate inside your IRA in a foreign country and buying your real estate inside your IRA in the United States is potentially the tax in that foreign country, if they have some kind of tax on rental income or that type of thing. Then you'd have to find that out for yourself. Next question, I assume the same rules apply to a property in the U.S. Yes. Yes, I mean, from a standpoint of using your IRA to invest in domestic property, really the primary difference is that you're probably in a foreign country going to need to set up a foreign entity. You're going to need to set up like some kind of equivalent of an LLC, whereas in the United States you don't have to set up an LLC. You can, but you don't have to. In most foreign countries, you're going to have to set up some kind of entity, and then whatever rules apply in that specific country. But in terms of, I went through like different ways of funding: direct cash, partnering, non-recourse loans, et cetera, et cetera. That applies whether it's the United States or in a foreign country. Do these types of transactions tend to draw the attention of the IRS? I have no idea. I've seen no indication of that, but it's not like we get a lot of our clients requesting documentation because they're subject to an IRS audit. So I can't say that there's any. I mean, it's just an asset held inside your retirement account. Most people who get audited, they get their tax returns are getting audited. And on your tax returns, the only thing that you're noting about your retirement account is whether you made a contribution or whether you took a distribution. They don't on your tax return, you're not detailing the specific asset that you're holding. And when we file the Form 5498, when Entrust files the Form 5498, or any custodian files that form on behalf of your retirement account, all we're reporting is the fair market value. We don't detail the specific assets that are held inside the account. So in terms of does it tend to draw the attention of the IRS, I don't really know how it would. I mean, the IRS doesn't specifically see the assets, unless they're looking for it, right? Unless they've flagged you and they're doing a deep dive on all your transactions, including your retirement account, and then they see that you hold a foreign property, then it'll draw some attention. But I mean, they'd have to be looking at you first. There's nothing that is reported to the IRS that tells them you bought a foreign property. At least not from us and not on your tax returns. In your experience, what are the biggest red flags that would trigger an audit? That's a conversation to have with the CPA. If there is a mortgage on real estate in a self-directed IRA, is there any taxable portion? Yeah, so that's what the unrelated debt financed income tax is. So if a portion of your purchase of a property is through a loan, is through leverage, through borrowed money, then a portion of the income generated may be subject to UDFI, unrelated debt financed income tax. So what that means is if your IRA borrowed 50%, so your IRA used 50% of its own money and borrowed the other 50%, then the way the IRS looks at that is says, well, then 50% of the income generated is not tax deferred because it's not IRA money. It's borrowed money. It's from money outside the account. So 50% of your earned income may be subject to UDFI, right? If you borrow 20%, then 20% may be subject to UDFI. And as the loan gets paid back, that percentage is going to go down. But yes, there is potential that if you use borrowed money, it's actually not just potential, it's likely that some amount your IRA is going to have to pay an expense of unrelated debt financed income tax. Any info or advice regarding Pacific West Capital Group investment? So the only thing I know is that they recently agreed to pay a massive fine to the Securities and Exchange Commission, both the Pacific West Capital Group as a company, as well as what's his name, the owner of the company, the CEO. He had to make a personal investment, which is going to, there's some kind of trustee that's overseeing this, like all the investors that have invested through Pacific West Capital Group. So I think the money's going to go back to them. It's going to be used to pay what are the things when you have insurance? You have to pay. I can't think of the word. Anyway, for those of you who don't know what we're talking about, this is for a life settlement investment that a lot of Entrust clients invested through these guys, and then they were subject to some SEC review and recently agreed to pay a massive fine. That's all I know. Next question, how much to start during the account setup? Well, it's $50 to establish a new account. We have no minimum to open an account. Although, I mean, I say that, but I mean, $250 would keep your account established. So if you want to fund your account with $250, and then that'll keep it open as long as you want until you want to put more money in to make whatever investment that you want to make. Could you rent a garage in an apartment for a separate LLC that I control? Could you rent a garage in an apartment? I mean, your IRA can rent a garage if you want to rent it out. I'm not sure I understand the for a separate LLC that I control. I don't know what that means, but I mean, your IRA can again, could rent a garage in an apartment, but it can't be your garage, right? Like if it's a garage that you personally own. The IRA can't rent it from you. And if your IRA rents the garage, you can't park there, right? That you have to then turn around and have your IRA rent it out to other people. Jim, I'm not sure if that answered your question. You can reach out to me directly if you want to talk about that more. Is there a minimum amount that you must have in your IRA account before investing overseas in real estate? No, there is no minimum amount. I mentioned $250. That's just like when sometimes people open an account, we'll keep it open for a while without being funded, and then eventually if it doesn't ever get funded, we'll close it. But if you want to keep it open without us closing it, then you just have to put $250 in and we'll keep the account open forever. Next question, can you make contributions to the IRA to cover its portion of the maintenance cost to a property that you buy? Yes, you most certainly can, and that's a good way to get money into your retirement account to cover expenses. But note, you're limited by the contribution limits that you can make into an IRA. So depending upon the type of retirement account you have, what your earned income is, those type of things, and it has to be earned income. You know, there's IRS rules around what you can and can't contribute, but sure, you can, as long as you're not impacted and you're not allowed to make contributions because of, again, your income or lack of income, then yeah, you can make contributions. Have you done any transactions in Costa Rica? I mean, I'm sure we have. I would have to get our real estate manager in here to talk about that, but I'm sure we have. Is Belize one of the countries you've done deals with? I don't, probably, I don't know. We've been in business for 37 years. We've had a lot of different investments. If over the 37 years has someone ever invested in Belize, I'm almost positive somebody has. But I don't have any information to provide you on how it went. Do you have banks in the U.S. that will lend against international locations, or do you have a list of international banks that will lend with an IRA? I have a list of banks that are willing to do non-recourse loans to IRAs. I don't have any specific like foreign bank like for doing specifically offshore real estate. Here, let me get my contact info up here. My expectation is if you're investing in a foreign country, and as I mentioned, you're probably going to have to establish an entity in that foreign country. That entity would be who borrows the money. And if you're established an entity in a foreign country, let's say Brazil, right, then go to Bank of Brazil and have the entity buy. Probably once you establish the entity in that country, then you can take that entity and go to like a bank in that country and borrow the money. I would think that would be how it would work. Is it better to use Roth or traditional money for purchasing foreign land? I mean, better is a relative term. What's better for some is not better than others. I can tell you the difference. Roth IRAs are pre-tax contributions that grow tax-free. Traditional is post-tax money that grows tax-deferred. If you think it's going to grow, you have the opportunity to grow it completely tax-free in a Roth if you have enough money in there. The traditional, you got a tax break when you made the contribution, but you do have to pay taxes on the distribution when you take it out. So which is better for you is it's up to you. Also, can you transfer money from IRA to Roth account if I have both at Entrust? So it's when you're going from a traditional, from a pre-tax to a Roth account, it's called a conversion. And yes, you can convert from your traditional IRA, your pre-tax IRA, to your Roth post-tax account. You're going to get taxed on whatever conversion you make, or you're at least going to have to file it. So talk to a CPA before you do that. But yes, you can. If you have two Entrust accounts, you can convert from the pre-tax to the post-tax anytime you want. Just involves a conversion form. It'll take a day or two. Can you have multiple IRA accounts since you are only allowed to make whatever your minimum contribution amount is supposed to be? I mean, you can have multiple IRA accounts, but you can't exceed your your maximum contribution to any one account. I'm not sure if that's what you're asking me, but if you have an account with Entrust and an account with Fidelity and you want to contribute, you're still limited by the contribution limit, so you can't do the maximum to both accounts. Can you have multiple IRA accounts that you're only allowed to make whatever your minimum contribution amount is supposed to be? Yeah, I'm not sure if I answered your question, but if I didn't, there's my contact info. Let me know. Handful of questions left. We're almost done. I already have a self-directed IRA with Entrust. Thank you for your business. Can I establish a new self-directed Roth IRA and contribute my already taxed income into this fund for future use for real estate purchase? Yes, you can establish a new self-directed Roth IRA. And yes, you can contribute your already taxed into this fund into this, not into this fund, but into this account for use? Sure, as long as you have earned income and your income doesn't exceed the maximum allowed to contribute to a Roth, then sure, you can do that. Wayne asks, if you violate prohibited transaction rules, would the entire IRA or just that investment be impacted? Your entire IRA. The rules state that if you commit a prohibited transaction inside your retirement account and get caught, then that IRA is considered disqualified and it gets distributed to you, the entire IRA. Next question, if a property is owned by an LLC owned by an individual and his IRA, can an individual take advantage of miles from property expenses paid from the LLC credit card? That's a great question. I have never been asked that. That is a really, can an individual take advantage of miles from the property expenses paid from the, so can you personally take, like if you have, if your LLC establishes, you have an IRA, or you have an LLC that is owned by your IRA and yourself personally, and you establish a credit card under that LLC, and that LLC gives miles as part of the rewards, can you personally use the miles for that? That is an excellent question that I don't know the answer to. I would have to ask my, I'd have to ask our compliance manager if that would be considered, because you're receiving a benefit. I get the question. You're receiving a personal benefit from money that's held inside your retirement, like from IRA money, because the investment is partially, the LLC is partially owned by your IRA. The LLC is partially owned by your IRA, and you have a credit card that pays mileage. That's a really good question. I don't know the answer to that, Mark. I'm going to, can you, if you're still here, can you put something when this webinar closes out, there's going to be like a questionnaire thing at the end. Can you put something in there with your email address and request I follow up with you on that? Because I'm going to have to ask our compliance manager that question. I've never got that question before. I really like that. I couldn't hear the answer to the minimum amount question because of your reception was breaking up. Could you please repeat your answer again? So I guess, Hassan, I don't understand what you mean by minimum amount. You had asked something about holding multiple IRAs. You can hold multiple IRAs. I don't know what minimum amount you're talking about. If you're talking about our $250 minimum amount, like, I mean, you can have multiple retirement. If you want to have multiple IRAs with Entrust because for whatever reason, you can certainly hold more than one IRA with us. You can open as many IRAs with us as you want, or with us and other custodians. What are the experience with self-direct IRA investment in China, Hong Kong, Macau, and Taiwan? John, sorry, no idea. I don't have an answer. I don't have any personal experience with any of those countries. I don't know if Entrust does in general. You'd have to again do your own due diligence. If I have a self-directed IRA in my simple, can I roll over a Roth into it? So again, you're not rolling over, you're converting. So you have to convert your simple to your Roth with the same company in which you hold the simple. So if your simple is with Entrust and you want to roll over or you want to convert to a Roth with Entrust, you can do it. If you have a simple with like, Fidelity or somebody like that, then you would have to convert it to a Roth with Fidelity, and then you could transfer from the Roth to a Roth with Entrust. I hope that makes sense. If I'm not clear, let me know. Okay, last question, and it's the minimum amount one. Is there a minimum amount that you must have in your IRA account before investing overseas in real estate? No. There is no minimum amount that you must have in your account to invest. Not only overseas in real estate, there's no minimum amount that you have to have with Entrust to invest at all. But we do have a minimum of $250 to keep an account open. So if you don't have anything in there and the account's about to close, and we do close it after an amount of time if it doesn't ever get funded, we just ask you to put at least $250 in there to keep the account open. Last question, how about Canada? Sorry if it's asked earlier. Again, I was asked earlier about Canada. I don't have information about any specific countries. This was more of a general, how to invest in offshore real estate. And again, I refer you back to all the due diligence stuff, which says you need to do all your own due diligence on the country that you want to invest in, but here's some things that you want to be aware of. We're going to make this available. The webinar becomes available like in the next day or two. You'll receive an email to the link. So if you want to go back and look at it again, you'll have the opportunity. And please feel free to email or contact me at the information below. But again, if you call me to ask me about it, like what's it like in a specific country, I'm not going to be able to ask that question. That's up to you to do that. Okay, thanks everybody for joining. We've got a couple of webinars coming up. We're probably going to do one soon about syndications. We may do one about cannabis, investing in the cannabis industry, and we might also do one about the SEC recently put out a notice about what to be aware of with self-directed IRAs, and I think we're going to make that into a presentation and do it as a webinar. So keep your eye out for those. As always, thank you for joining. Don't hesitate to call me or email me if you have any further questions. Thanks. Bye.